Credit Suisse is about to collapse the world economy. Today I basically want to issue you a warning that Credit Suisse is just about to replicate the Lehman Brothers moment from 2008. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Alessio Urban just tweeted saying credit default swaps for Debit Suisse, aka Credit Suisse. This is a chart that shows the 5-year credit default swaps for Credit Suisse. Obviously these CDSs peaked in March of 2020 during the pandemic, but right now in 2022 the Credit Suisse credit default swaps are trading even higher, showing that Credit Suisse is even more likely to go bankrupt right now than it was back in March of 2020. Not only did these credit default swaps rise in March, April and May of 2022, but during June they've absolutely skyrocketed to new highs, substantially past those March 2020 previous highs. Now you may remember from my video the other day that Credit Suisse has just struggled issuing debt or issuing loan notes at nearly 10% interest. Credit Suisse issued $1.6 billion worth of loan notes at 9.75% interest. These loan notes were only rated BB, and Credit Suisse's credit rating is also only rated a BBB. Credit Suisse, one of the largest banks in the entire world, isn't rated AAA rated. It's not rated AA, it's not rated a single A, it's only rated BBB, and its debt is only BB. Fairly close to a default rating or junk credit already. Simon Adamson, the London CEO of CreditSights, said that it's quite a tough sell even at that level. The main question is, who wants to buy Credit Suisse paper at all in this sort of market? Now you may also remember that Credit Suisse was the major bank that failed to report their short sales for 7+ years, from February 2015 through April 2022. Peter Han also replied to that saying this would also include when they were the prime broker for Archegos, and we never did hear about Archegos shorts, even though Credit Suisse was busy trading AMC in the dark pools through February and March of 2021. Credit Suisse obviously suffered a massive loss at the hands of Archegos and could potentially still be holding AMC and GameStop short positions courtesy of Archegos. But not only that, Credit Suisse has also recently made a human sacrifice to appease Gary Gensler. They've said perhaps now the regulatory gods will show the bank favour for once. It says among the very last things in the world that Credit Suisse needs right now is yet another legal or regulatory investigation. These probes generally turn up evidence that Credit Suisse has done something wrong, because if a bank that's issued 6 profit warnings in 7 quarters is doing something, it's probably doing it wrong. Credit Suisse were also embroiled into the recent block trading investigation that was mostly focused on Morgan Stanley, but did also rope in Credit Suisse. And more recently, Credit Suisse has also been under fire or under SEC investigation due to messages through messaging apps like WhatsApp. The Dealbreaker article said it must have been a relief when Credit Suisse's usually hapless Keystone cops were able to pin the encrypted messages on one guy. They've said sure, Anthony had been with the bank for 28 years and actually ran its equity capital market syndicate. And sure, he hadn't actually done anything nefarious in those improper communications, but his was a scalp that Gottstein could present, prostrate to Gensler in a grisly plea for mercy. AKA Credit Suisse's head of equity capital market syndicate, who has been with the bank for 28 years, has just been fired for improper communication on messaging apps like WhatsApp. Considering that Credit Suisse has had 6 profit warnings in the last 7 quarters and the Credit Suisse CDSs are reaching new recent highs, it wouldn't surprise me if Credit Suisse is just around the corner from actually going bankrupt, just like Lehman Brothers did back in 2008. You may remember this article from Reuters back in May that says Wall Street sees greater risk of default by major banks. Credit Suisse is obviously taking on heavy losses, issuing profit warning after profit warning, and therefore it wouldn't surprise me if Credit Suisse ends up going bankrupt and ends up defaulting in the not too distant future. I think if a major bank like Credit Suisse does go under, it will be a massive shock to the capital markets, and we will likely see the S&P 500 and the wider market tank by 5%, 10%, or maybe even higher in a single day. You may remember this interview or this video featuring Kevin O'Leary when he said that we still need to see some major players, potentially a major bank, going bankrupt to cause one final Hail Mary for the stock market before it really bottoms out. He said he does expect a major bank, institution or major player that is very heavily over-leveraged will go under in the not too distant future, causing a massive crash of the S&P 500 and the wider markets before everything is said and done. Now, as I've said in a number of my recent videos, I do think this is exactly what we need for the AMC squeeze. I do think a major bank or a major institution like Credit Suisse or potentially Bank of America going under would be brilliant for the squeeze. It will obviously crash the markets further, causing tons and tons of blue chip stocks to absolutely hemorrhage, causing tons of hedge funds to struggle to meet margin requirements. Especially if it ends up being Credit Suisse or potentially Bank of America that are potentially holding massive swap positions or massive short positions on both AMC and GameStop. If they end up going bankrupt or being liquidated, they'll be forced to close out of their shorts and forced to close out of their swaps. We know that Archegos held a number of swaps that are now likely still held by Credit Suisse. We know that Bank of America is the prime broker for Citadel, and therefore there's likely a number of swaps between Bank of America and Citadel. If the market crashes and these hedge funds struggle to meet their margin requirements and end up being liquidated, forced to close out of their short positions, or if Credit Suisse or Bank of America end up being liquidated as well and forced to close out of their swaps, that will definitely cause the AMC squeeze. And as Gergevin tweeted, he said, "We are on track for the worst quarter ever in the history of the stock and bond market, according to Bloomberg." So far in quarter 2 of 2022, the MSCI All Country World Stocks Index and Bloomberg Global Bonds Index is down around 25% on the quarter. Now that is worse than in March of 2020, and it is worse than quarter 3 and 4 of 2008 and quarter 1 of 2009. It's also worse than the 2000s dot-com crash and also worse than the recession or Great Depression in the late 80s and early 90s. And obviously if quarter 3 and quarter 4 of 2022 continue in a similar fashion, we're likely to see the worst ever year for the stock market in history. And something I do think would absolutely trigger quarter 3 and quarter 4 to replicate quarter 2 would be a major institution like Credit Suisse going bankrupt. I do think this is absolutely what we're waiting for, and I do think Credit Suisse is absolutely the bank that will cause the Lehman Brothers moment of 2008, but this year in 2022. Now you may have also noticed that Charles Gasparino yesterday tweeted saying the world is falling apart because people invested money into that theatre chain and a lot of other rubbish. Something I do think is crazy is that we are genuinely being blamed as the reason the world is currently falling apart. Now obviously this is just Charles Gasparino's usual ramblings, but I do think there's actually a hint of truth inside this message, and I think it's scary that it is actually true. Retail investors have invested maybe 10, 20 or 30 billion dollars into AMC synthetic shares, and another 10, 20 or 30 billion dollars into GameStop synthetic shares as well. That's a total investment of say $60 billion by retail investors. Hey, let's even round it up to $100 billion. And our $100 billion investment is about to crash a $53 trillion stock market because of the fact we simply would not admit defeat and sell out of our AMC and GameStop positions. These hedge funds have over-leveraged more and more and more on their shorts, putting in billions, if not trillions of dollars into their shorts, and it will end up crashing the market. Because obviously we aren't going to sell and we aren't going to admit defeat, and therefore these hedge funds will end up going bankrupt, being forced to sell off all of their stocks, being forced to crash the wider market, and causing the AMC squeeze as a result. Again, I think this shows just how close we are and just how desperate the mainstream media and the hedge funds really are, because of the fact that Charles Gasparino is saying the world is falling apart solely because people invested into AMC. If this doesn't give you confidence that the AMC squeeze is just around the corner, I don't know what will. To give us even more confidence, the Cabetti letter tweeted saying this week the Fed's forecast showed them cutting rates in 2024. They've said the only reason to cut rates would be to revive the economy after this coming recession. He said while they won't admit it, the Fed knows we are going into recession, and the Fed is making a current mess an even bigger mess. Buckle up. I think the fact the Fed is forecasting to increase rates this year and next year and then cut those rates in 2024 shows they are absolutely preparing for a recession and preparing to try and solve a recession later down the line. You may have also seen this tweet from FX Hedges that said Binance bought $2 billion worth of Bitcoin over the weekend in an attempt to stabilize the price. Obviously, Bitcoin did crash and did fall to below $18,000 per coin, but has since recovered now to around $19,000 a coin. Now, the only reason Bitcoin didn't fall further is the fact that Binance bought around $2 billion worth of Bitcoin. But as Ferre tweeted, he said they can prop it up all they want. Just ask the Fed how that's going for them. I personally believe that Bitcoin will continue to fall. Binance may be able to invest another $2 billion next weekend, maybe another $2 billion the weekend after that. But what happens when they run out of money and can't continue to prop up the price of Bitcoin? I do believe Bitcoin will continue crashing as these hedge funds sell off their Bitcoin, withdrawing liquidity from the crypto market, selling off their blue chip stocks, withdrawing liquidity from the stock market, all to pump in more and more cash into the meme stock short position. And it won't be long until they simply run out of money to withdraw from crypto, until they run out of money to withdraw from blue chips and end up causing the squeeze. But guys, be sure to let me know what you think down in the comments below. Also be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.